What's up, everyone? My name is Ale. Welcome back to my world of stocks, and welcome back to my newest series on the channel called Stocks That My Viewers Want Me to Look At, where in each episode, I pick a stock from the comment section that you guys mentioned that you want me to do a really quick review video of it, and I share my thoughts and I let you know if I would consider buying the stock myself. Now, this is our third episode in the series, and this time we have a comment coming from a viewer named Rudy5484 who asks, "Hi Ale, I love your videos and I'm a big fan. Can you please talk about Shopify stock? It is one of my largest holdings and it is down a lot right now, but I think they have a lot of promise as an alternative to e-commerce giants like Amazon or eBay for companies that want their own online store. Thank you." You are very welcome, Rudy. Thank you for the very nice comment. So I actually do know a little bit about Shopify stock. I consistently keep it very high up on my watch list. I've tracked it for years. That is because it is one of the most popular high growth tech stocks out there in the market, and it is constantly being talked about, especially for what they do in the red hot e-commerce market. However, I have never actually owned this stock myself, so it would be a fun video to take a closer look at. And like Rudy mentioned, the stock is down a giant amount right now. So is it finally a good time to be picking up this stock on the dip? Well, let's take a closer look and let's find out together. Okay, now just a quick little background on the company to start things off. Shopify is, of course, an online shopping platform provider that basically provides all sorts of tools and services to small, medium, and even large sized businesses as well to help them set up and run their entire online shopping infrastructure, having already attracted millions of merchants to use their services across 175 countries worldwide. And like Rudy mentioned in his comments, this is a heavily needed business because unlike Amazon or eBay that simply list your product and charge you a fee on their platform, well, Shopify actually helps you set up your own entire infrastructure that you can run on your own website or one provided from them. And from there, they'll provide you with literally everything you need, including help with shipping, inventory, payment processing, analytics, marketing, social media, customer service, and they even help you with physical brick and mortar stores too, including all the hardware and software that you might need. It's really a fantastic, like, all-in-one approach that makes your business really sticky since you're likely to add on additional services and features to the ecosystem over time at various price points and as you grow larger, which you're then not likely to switch over to a different provider because you already have everything up and running through Shopify and you've invested so heavily in it. It reminds me of something, very similar to that of Apple, who runs their ecosystem in a very similar way. They get a lot of people hooked onto their phones and then add on more products and services over time until they're so deeply entrenched into that ecosystem that they're just not likely to switch over to something like Android or anything else. And that leads to snowballing financials over time that should eventually benefit Shopify too. And we're already seeing a lot of that right now. And yet, because of their still relatively small size, doing less than 5 billion in sales last year, while the broader e-commerce market has already grown to over $5 trillion, and it's still managing to continue growing by over $500 billion every year, well, Shopify should still have a giant amount of room for future growth, considering that online shopping as a whole still makes up only less than 20% of all retail. And growth is what we've mostly seen from them, especially during the pandemic, where people were staying home and shopping online, thus skyrocketing Shopify's financials, even helping them turn a profit for the first time ever in 2020, which was then multiplied by nearly 10 times that amount the following year. Revenue-wise, they also continue to set record highs every year, with sales climbing by about 50% in 2019, 85% in 2020, and still another 57% in 2021, which is all very impressive. However, here in 2022 and 2023, that growth has now plummeted down to around 20% expected in each. And when you look at the stock, we see the same type of performance, with the price skyrocketing up until 2021, but now proceeding to crash by almost, or somewhere around like 75 to 80% from the top. I mean, it's really plummeted in terms of the stock price. So the question is, why is the growth slowing down? Why is the stock crashing? And is the stock now a buy at these lower levels? Well, the slowing growth and falling stock price is really due to several reasons, those being that we are now moving past the pandemic, which means people are going back outside and relying less on online shopping like they did the previous 2 years, making for a very difficult comparison these next couple years. Thus, you're seeing the growth come down a lot because it's a tough comparison. You also have skyrocketing inflation and interest rates at like 4 decade highs that are destroying the economy and really scaring consumers away from making as many impulse purchases online than they otherwise did in the past when everything was rosy and the economic outlook was a lot brighter. Whereas now everyone is scared of a looming recession and maybe less likely to, push into online, sales and things like that. So the result of all of this is that Shopify has had to implement mass layoffs in order to cut costs as much as possible, and even with those moves, their profits by EPS are still expected to fall by over 40% on average over the next 5 years, compared to the positive 70% growth that they saw in the previous years. And because of that deterioration in their profits, even their valuation is still sky high right now, even after that massive stock crash, leaving them with virtually no P ratio again, and even a price to sales ratio above 8, which is like 8 times higher than what is generally considered a good PS value, which, by the way, it's also more than 200% higher than the sector average. Now, granted, you have to keep in mind that Shopify has always traded for a rich valuation because of their growth and the future potential. In fact, their own 5-year average for the PS ratio is actually as high as 25. So right now, you could argue that this is actually one of the cheapest valuations that you've ever seen in the stock. And yeah, that'd be fine. Maybe you could buy the stock just for, that turnaround potential, because history tells us that it'll probably be a high flyer once again. But my personal issue with Shopify, and the reason why I've never purchased it, is because you still have to worry about a ton of heavy competition while there are still safer options out there in the broader market. And that reason alone makes it not really worth it to me. First of all, platforms like Amazon or eBay and even social media giants like Facebook and Instagram are all growing their e-commerce capabilities and allow small businesses to list their products and services online in some way. And even if you ignore those and stick to more pure play e-commerce platform makers in the US, well, Shopify does still command the most market share at about a quarter of that market. But there are several companies that are rising the ranks to compete, like for example WooCommerce, Wix, and Squarespace, some of which even offer free versions of their services and have already gained double-digit percentages of the market. Wix is even above 20%, while WooCommerce is just right behind that. And so at the end of the day, I come back to what I ultimately say about so many of these smaller tech stocks that trade at high valuations and struggle with consistent profits. Why not just own giant behemoths that are much larger, more profitable, and unimaginably, more diversified for an even cheaper valuation thanks to the current market conditions that are dragging everything down? For example, Meta does over $100 billion more in sales than Shopify, while Amazon does almost $500 billion more. Shopify also has negative cash flow, while Amazon and Meta are above 40 billion and 50 billion respectively. And yet, both of them also have better earnings growth, with Shopify at negative 44%, Meta at negative 18%, and Amazon at positive 26%. And they even trade cheaper too, based on sales, with Shopify at a PS ratio of almost 9, while Meta is around 3 and Amazon is less than 2. So while I love Shopify's business and I track the stock all the time, I'm going to continue tracking it in the future, and I think they will be able to turn the business around. I do think they'll be profitable long term. I think they've cut out a very unique chunk of the broader e-commerce market, and I think that part of the market will also consolidate over time into smaller players, and I think Shopify can be one of the leaders there. I just think that at the moment, though, there are much safer, better options at today's prices, including things like Amazon or Meta stock, who, sure, may not give me the same exact exposure to what specifically Shopify does, but they're still big players in e-commerce and they're much more diversified, they're much larger, more profitable, much safer companies to invest in, and I can sleep really good at night owning those stocks. I sleep like a baby owning Amazon stock. Amazon stock could be volatile, something can go wrong with their business, and it doesn't matter to me. I can easily own that stock. Whereas with Shopify, I would put it into the basket of other speculative stocks that I own that I do have to keep a closer eye on. I do have to worry about more. If something goes wrong with the business, I do have to reconsider if I should even be invested in them. It's just a little bit more of a headache. Sure, Shopify probably does give me a lot more upside potential in the stock if things go good versus something like Amazon, that can only get so big. But in this macro environment that we're operating in right now, I think the bigger diversity and the bigger safety and profitability of a giant like Amazon, I just think is actually more valuable than the riskier bet that you'd have to make on Shopify. So for me personally, I already own a lot of spec stocks and I already own Amazon and Meta, so I have exposure there, and to e-commerce and with other companies too. I of course own Alibaba, many other stocks, but Shopify is just not a high priority for me at the moment, so I will not be buying the stock. But I'd love to hear what you guys think. Do you own a Shopify? Are you thinking about buying the stock? Let me know your thoughts down below. Do you agree with anything I said? Do you disagree? Let me know. And if there's any other stock that you'd like me to do a review video on, please let me know that as well. But I hope you enjoyed this video. I hope you're all doing well, and I will catch you guys in the next one. Take care, my friends. I'll see you soon. Bye-bye.